Ondieki, I'm looking at diaspora remittances last year. They hit over 460 billion, and a lot of the diaspora people here have already invested in the real estate in the country, and as Simplicia said, that a lot of them have also lost a number of $1 million in regards to investing in real estate in the country. How do we incentivize the diaspora to ensure that you invest more in the country in the real estate?
That's a wonderful question, and I have to thank you for that. We've engaged several entities on this particular item. Mm-hmm. As you know, and when you look at the remittances and look at the map on how remittances are done to the country, the majority of these remittances come from the US and Canada. I can tell you that the amount of money that comes from the US is not even 5% of the potential. This is the reason. When you talk to a central bank, for example, they will tell you that the majority of these funds that are sent to Kenya are sent to take care of a school fees of somebody or pay something for somebody else and so on and so forth. A few dollars are sent in to build a house for residential. A very minimal amount will be seen in a few apartments here and there. Now, this is the thing, and these are the numbers, and I believe the ministry has these statistics. We have in the US, for example, about 150,000 Kenyans. Out of 150,000 Kenyans, these are first generation, by the way, first generation. There is a second generation because remember Kenyans started coming here in the 60s. There is a second generation and third generation of Kenyans who have massive amounts of money. Now, let me confine myself to the first generation of Kenyans, meaning the people who boarded their plane from JFK and came to the US. Out of 150,000 Kenyans who live in the US, about 50,000 of those have worked in the US in jobs that have earned them a fair amount of money for a long period of time. Meaning these people have what in Kenya would be considered as providence funds. Here they call them IRAs. These are retirement funds that the US government encourages people to self-direct to whatever investment wherever they can, and is protected by the US government. All right? Now, think about it this way. An average Kenyan has about $350,000 in an IRA that is movable to be invested, about 350. And this is about 50,000 Kenyans. Do the math. It's billions and billions of shillings that could be directed to be invested in Kenya. And I alluded earlier to the amount of investment that has been done in Israel. Now, this is where these funds come from. That's number one. Number two, and I want to go fairly quickly. The real estate market in the US is cyclical. We've studied this market from the 1700s, so we know exactly how it works. This time around, the cycle has been a little bit longer. But what happens here is the market goes up and down. You buy a property for, if you are in Oklahoma, for example, you buy a house for $200,000 today. 5 years down the road, the value is going to go to $500,000. If you're in LA, you buy a house for $1 million today. Maybe a year down the road, it's going to be worth $3 million. This is the difference between the US and Kenya and probably many other countries. That equity, if I bought a property for $1 million in LA and it went out to $5 million, I can go to the bank and refinance. And I know in Kenya, we have the Kenya Refinance Mortgage Company now that is trying to do this. And there are some issues there, but they go out and refinance and get this $3 million. What do you do with that money in the US? This is the interesting part. If you keep this money in the bank, I know we used to talk about certificates of deposit. In the US, you get 0.25% interest. Unless you're a business person who invests it in something here, then it's not going to make any sense. So what is the logical way of doing this? This is what people from Mexico, people from India, people from Philippines, people from Israel, and many other countries have done. When the market gets to the close to the peak as it is today, in the US, the market is almost at the peak today, these people refinance and pull out all this money and take it to the countries where they can invest it at higher returns. Think about it this way. If the real estate investment trust that we put in the country, the stock market, if they appealed to these people to invest at 8%, and I know they pay more, 8%, what do you think would happen? These people be excited to invest those funds there, right? The problem now is there is a disconnect between knowledge of what is possible and security and safety of these funds. So to cut the story short here, the fact is, if there was that connection between, and by the way, this is part of the stuff that is being discussed fairly extensively in the course that Simplicia spoke about. These are some of the things that if there was some coordination, and by the way, people need to stop thinking about the government to do things for them, because the government, even the US government doesn't do these things. The private sector could do these things. The government, so long as the government puts together the regulations that facilitate, enables people to do these things, institutions like banks could sit down and come up with these structures and say, okay, let's figure out how to go raise funds in the US. Do we have the right structures in Kenya? Yes, we do, because I know some structures have been put in place. Does the US law allow this? Oh, yes, it does. And it protects this money, because these Kenyans are Americans as well. So the US government protects their money to make sure that that money is taken care of. But at the end of the day, then we have enough liquidity to take care of the issues we have. In the past few months, we've had a few issues with the dollar, the fluctuation of the shilling, the weakness of the shilling. And, of course, we didn't have enough dollars in the marketplace, which caused a few problems. You ask yourself, if there was some coordination, how much more of the 460 billion shillings would the country receive in terms of dollars to, push up the economy? So I think the private sector, it's up to the private sector to do this, but also what UNES is doing at the University of Nairobi is a wonderful thing to start explaining some of these things to the business community in Kenya, and connect these people with diaspora countries that, I would name US, I would name Canada, I would name Australia, and some European countries where these funds could be raised from. At least the US has the laws that allows for this, to do a lot of development in the country at a very low cost, because the cost of construction starts with the cost of money. If you get money at a cheaper rate, interest rate, then everything else starts moving the same direction.